we're sitting near all-time highs, so things are pretty good. But would you say they're irrationally good right now?
Yeah, look, I think markets went through a period of a near 20% correction. So keep that in mind. So we're recovering from that. In fact, on a year-to-date basis, the S&P is up only 4 to 5%. So I wouldn't say yet we're experiencing any period of irrational exuberance. But we do know when momentum begins, it tends to continue, and markets can overshoot to the upside and can also overshoot to the downside on the reverse side. Now, what we'd say more broadly is, look, we've experienced one pretty severe correction already this year, but in a year with elevated uncertainty, we know 2 to 3 corrections are the norm. So could we expect more volatility in the months ahead, especially as we're digesting more trade and tariff headlines, a tax bill, potentially softer economic growth? Absolutely. We think there is a possibility of that, but we don't yet see any sign of a complete reversal or bear market or bubble burst on the horizon.
How much does time matter? I mean, this time now at the beginning of July, the beginning of the second quarter, we got every institution piling into stocks at the end of the last quarter. So can people wait now and see, like the Fed, for what's going to happen?
Yeah, I think investors and the Fed are in many cases, a wait-and-see mode. Everyone is waiting to see where the tariff rates end up across all our trading partners. And, of course, what the impact is on inflation and the labor market. Thus far, pretty benign impact. And so if that continues, we continue to see the Fed on pace to cut rates. Now, whether that happens very gradually or more aggressively, that remains to be seen.